It's your boy Crypto Millie back with another one. So I wanted to do sort of like a Sunday overview. I do plan on touching on the Jasmy price action. As you can see, I do have a little bit of a Jasmy thumbnail. And then I'll talk about some of the things that I've been doing as far as personal research. So if you like these type of videos, make sure that you like, subscribe, hit that notification bell, and keep your favorite crypto and door-to-door entrepreneur in the algorithms. Now, from a grand scheme of things, I think that we should start preparing as if we are headed into a recessionary environment. I believe that there was some news that came out where there was a little bit of tension between Trump and some countries out there. I don't want to really speak on anything political, but there were tensions, and then more tensions with Canada and the tariffs, which is creating a lot of uncertainty in the market. In fact, from some of the research I've been doing, I came across this post here. 6.1 million Americans are behind on their mortgage. FHA delinquencies just hit 11%, the highest in years. So I did decide to do a little bit more research on this because this could be a POI that we need to pay attention to, that could be hints of getting us into a recession. So I created this recession watch based on some of the information that I was able to find. This was research that I just did within the last 24 hours. Are mortgage delinquencies a warning sign? And let me know how the housing market may be going in your area. You know what I mean? If anybody has any wisdom behind the the home builders market or whatever, right? I'm always open to ideas and opinions inside the comments. It really helps the algorithms. So it says the question: do high delinquency signal a recession? Recent figures show significant numbers of Americans behind on mortgages and a high FHA delinquency rate. But does this automatically mean a recession is coming? Right. So there's been a lot of conflict of interest with the job market and also the home builders. We like to always look at the XHB chart. No reason to look at it right now because it is the weekend, stock closing the weekend, but we'll see on Monday how the market wants to further react to some of the tariffs news that's out there. Unfortunately, when we get good news, market doesn't pump, right? But when we get bad news, markets dump. And then also when we get good news, the markets dump. So it's just crazy. Data point here was 6.1 million behind on mortgages. The estimate percentage of total mortgage delinquent is about 7%. So this is 6.1 million of 85 million, right? Wow, 6.1 million sounds high. Perspective is the key. This represents roughly only 7% of mortgages. This is elevated but remains low, just based off some of the research that I did. Peak seen remains low below the peak seen in 2008. So we're not as in an environment that's as bad as the 2008 Great Recession. So that's good. The NBA's Q4 2024 overall delinquency rate was actually below the long-term average as well. My assessment here was this shows stress, but not yet at a historical crisis level across all mortgages. So you probably wonder why I'm talking about this. Well, if we have any chance of an altcoin season, we need to get out of an environment where policy is being restricted. And unfortunately, bad things have to happen for us to get those Fed cuts, since Powell doesn't seem to want to move the needle just in a natural and organic perspective, right? So that's why we're starting to see the market react to this uncertainty, because you see what every time we get a little pump, Trump comes out here, just says anything, right? Data point 2, FHA delinquency at 11%. This figure is far more concerning, right? Now, check this out. FHA loans target borrowers potentially more vulnerable to economic shifts. This rate is significantly higher than conventional 2% in VA loans for the same period. If you're probably wondering what all this means, a clear canary in the coal mine reflects strain in specific higher risk segment, likely due to inflation and interest rates. However, it's still below the 16% pandemic peak. So again, this delinquency of loans that you see on these houses, we're still not as bad as it was in 2020. So the market is still showing strength, not as much strength as it was, but it's still better than some of the events and the economic crises that we have, right? So what we're getting is broader economic picture, mixed signals. The labor market is relatively strong, unemployment around 4.1%, though forecasts suggest potential rise, right? We're seeing layoffs happen. Consumer spending was robust, but now seems to be slowing. But wait, Personal savings rates are down. Credit card delinquencies are up. According to the GDP growth, slowly recently, but has shown consecutive negative quarters, the technical definition of recession. Right? So we haven't seen like two bad quarters back to back, which technically means we're in a recession, but it is what it is. So according to just the likeliness of us having a recession, just based on what's happening with these people behind on these mortgages and that job market, is about 30 to 40%, right? So it's not bad, right? But it's moderate, right? And the concern is the uncertainty, right? And of course, we'll start to get more data over the next months or the next, weeks or whatever. But this is just how I'm looking at it right now. And we're not yet in an area of 2008, right? So, you know what I mean? It's not that bad, right? So I just wanted to put that out there. I know that was a lot, but it's things that we have to talk about. I'm also paying attention to Ethereum on the weekly. We still haven't got our buy print just yet, but I wouldn't say that Ethereum is in an area of this looks like a mix between accumulation and distribution. So it looks like Ethereum is trying to decide which way it actually wants to go. But when you think about the distribution that we are seeing, the fact that the moving averages are going lower and that it's really, really starting to break our red box here, this is really not good for Ethereum if we come out Monday and stocks continue to go down and react to some of the tariff news. This could only hurt something like Jasmy, right? And the bullish hopium here is on the weekly. We're starting to see a nice, good, thick liquidity pool here as far as the liquidation heat map. So it's a good chance that ETH does want to head back to north of 2,000, 2K, and kind of liquidate some of those shorts. So that's actually a good thing. Let's check it out on the monthly here and give it a little bit of time to load. But on the monthly here, man, same thing that we see from Bitcoin, right? We got this thick liquidity pool at 62K, and for ETH, it's sitting here around 1,500. So how I got to look at this is if Bitcoin goes to 62K and ETH goes to 1,500, I'm not going to say that's the bottom because we are losing key moving averages, but we have to be hopeful that that's all the pain that we get. I'm not saying it's going to happen, because just because you see this heat map like this doesn't mean it's going to happen. But in this area and environment of uncertainty, we have to prepare as if this could happen. And I know it sucks to have this conversation, right? But we have to have this conversation, right? We can't. It's not always going to be peaches and cream in crypto, right? It just is what it is. So these are just some of the things that I'm paying attention to. And I challenge everybody in the comments, like, where do you think that we're in this market cycle as far as psychology, disbelief, hope, optimism, thrill, euphoria, complacency, anxiety, denial, panic, disbelief, anger, or depression? I'm gonna leave y'all with that. I would love to know you guys' comments. And as far as Jasmy, Jasmy is now hitting at a critical point, which is this structure here. And I believe that the reason that Jasmy has headed to this structure is because of the monitoring zone and the potential delisting. Even though that's temporarily, it should be over with. I don't know if it's like officially or they can't put us back in there. I don't know how Binance works. Binance kind of like works as its own tune. But we need to hold this structure here, man. And that's where we're at right now. We're at that structure here at about 1 penny. We need to hold the white line here would be around 208. Need to hold 200. You don't want to see Jasmy break 208, right? And this is me just being completely transparent with y'all, right? Jasmy does not need to break 208. There's also on the weekly massive distribution. I mean, look at it. This is all distribution based off the definition of what distribution. When you take a look at the volume, right, you're getting nothing but distribution within the last few weeks on Jasmy. All right, we need this change. We need this to change. We need this to look more like this here, which is here. This was accumulation. Chart was low, but you were seeing buying pressure. We need accumulation. This is distribution. So until this changes and we see some movement from ETH, it's going to be kind of rough for not only Jasmy, right? many altcoins, right? They're going to be stronger altcoins, right? At one point in the market, Jasmy was one of the strongest altcoins. Right now, it isn't. It isn't. So we need to hold this rectangular box here. If we do not, it could get ugly. So I'm gonna leave it at that, guys. Let me know where you think we are at in the market. And again, if we are in this area where we can possibly be in 2017, 2018, right, with the tariffs and the recessionary environment, you should start preparing now, as if I want to be a little bit more aggressive towards my ability to make income. So if we do crash or we do hit a recessionary environment, I can have that kind of like that Warren Buffett mentality, come in, scoop up, buy generational prices for some of these really, really good altcoins. But let me know where we're at in the market cycle. Appreciate everybody. Enjoy your Sunday. It's your boy Crypto Millie. I'll see you in the next one.